Hi, let's talk about stock market investing and portfolio construction. As you can probably tell, this is like one of my favorite things to talk about. I mean, it's gone from kind of a hobby to really what I want to pursue as my full-time job. But I need to make a disclaimer. I'm a technologist. I'm not yet a registered financial advisor. This content is for informational purposes only and should not be considered financial advice. None of what is presented here should be considered a solicitation to buy or sell any securities. As always, please do your own research and consult a financial advisor before making any investment decisions. So, with that said, let's talk about stock market investing and portfolio construction. So, a big reason and motivation to build this platform is because I know how important it is to be invested for the long term, for the safety and security that planning for retirement and having that nest egg provides people. But I notice that a lot of people spend too much time and maybe their money as well on things that are more ephemeral, things that aren't that lasting, that are there only for the moment. And I just want to encourage people to allocate some portion of their screen time and discretionary income towards something that could be more productive and have a higher payoff in the long term. Which brings me to the markets, to investing. Now I understand that for most people, they may lack capital or experience to really feel comfortable investing. I totally understand that. And because of that, they may have even a greater fear of losses, right? Sometimes the potential for making money is outweighed by the aversion we have towards losses, the potential for losses. I totally understand that, which is why I think it's so important to understand what risk management is all about. Right? Understanding payoffs, understanding how to size your risk, how to position things, understanding that not all companies are the same. Not every stock has the same expected return profile, same valuation, underlying fundamentals, position in the market. There's so many different things that make it each individual company very unique to itself. And so I wanted to build a platform that allows people who, even if they lacked capital or lacked experience, could still feel to go through the paces of what it feels like to be an investor. And I felt like if you went through those repetitions and you got that practice and you saw what good looks like, and you had a chance to look at lots and lots of different companies to find out what are the characteristics, what are the patterns, what are the telltale signs, the markers that clearly identify companies that are trending companies that are trending upwards and could be considered good investments, and those that may just be, for whatever reasons, mispositioned, possibly mismanaged, read the market wrong, for a variety of reasons, right? The thing is, every business has the potential to turn things around. I don't think that almost all the companies, I shouldn't say almost all, but most of the companies that you can invest into the market are generally well run. I mean, there's a hurdle that they need to overcome to become listed in the stock market, in the stock exchange in the first place. And through reporting requirements and audited financials and just analyst coverage and just the competition of being an investable asset, a tradable asset in a marketplace, that brings a certain level of rigor and discipline to the operations of a company. So for the most part, many of the equities, the securities, the companies that you see tradable on the market have gone through that level of diligence. So I think that's one thing to consider. But at the same time, not every company is positioned for growth in the future. Some companies may just be trying to hold on to a market which is shrinking and may lack the resources, the innovation, the talent, whatever it may be, to turn things around. So you really do have to sort of pick through that. And that's why a platform like this, I think, is very valuable, or at least interesting, right? So we wanted to also remove a lot of the complexity. I think some people, when they're first wanting to get started in investing, they get intimidated and overwhelmed by there's so many numbers and there's so many graphs and charts and these candlesticks and these technicals. That's quite complex, and they feel like they're already at, they're already sort of, at a huge disadvantage against the experienced traders in the market, which is probably true. But at the same time, if you're, not used to analyzing financial statements of companies, understanding cash flow, and understanding the difference between revenue and net income and capital expenditure versus operating expenses, for example, understanding how to read what's on a balance sheet, and understanding what a company's debt levels are relative to their revenues, their ability to pay down their debt, service their debt commitments, their ability to raise capital through bond issuance, for example. All of these things, their credit rating, all of these things may seem quite complex. And I mean, until now, they've been pretty complex. I mean, that's why there are professionals who do this day in and day out. But for most people, they have their day jobs that they need to focus on. They have their friends, their life, their family, so on. They have their other priorities and responsibilities. They can't be spending all of their waking hours glued to a screen trading the market. So that's something that I wanted to kind of, remove some of that complexity away and make approaching the markets and investing, make it more approachable, make it less intimidating, make it more empowering, give people more control. So if you give people this control and you give them the ability to express their ideas, their themes, where you remove the obstacle of having to manage or to have capital to start investing, then they can go through the reps and they can learn how to become a better investor. What does a smart portfolio look like? What are good decisions to make as it relates to planning for your long-term future, and what are the types of companies, the characteristics of the companies that will have strong, robust, durable growth prospects over time, regardless of market cycles. So that I felt was very important to me, and I know that that's something that I would have wanted to have access to when I was first getting started in the markets. When I first started getting in the markets, I was simply investing in an employer-matched investment account. So that was a great opportunity for me to just put money away, almost as a form of savings. So every month I had a portion of my paycheck which I would allocate towards investing into a fund, an investment account, basically. And that investment account invested into sort of a fund in the market, a collection of stocks, basically like a portfolio of stocks. And the nice thing about that was my employer at the time would match. So if I would put in some money of my paycheck, my employer would also match that. So I almost got like free money. So between the employer matching and also picking a well-managed fund, it was like essentially free money over time, right? You just set it and forget it, didn't have to think about it much. And you let your wealth accumulate, you let your wealth grow. either through the appreciation of those individual holdings or the dividend payments, which can compound over time, or the combination of both. That was a very effective strategy, and it's something that I think people might not even know that is available to them. But you should definitely check that out if you can. But it wasn't until that I decided to pick some stocks myself, which I thought could outperform the market, companies that I thought would perform exceptionally well. And I won't name any specific sectors, or I should say securities, but those were good picks for me. Those were very good investments for me, and that sort of served me quite well, especially in a difficult time in the economy when I found myself unemployed and without a steady income stream anymore. I was lucky to have this investment account that I had built up over time. So that was great. And so that showed me the power of actually becoming more active, more engaged with your investing, and actually, using your kind of observations about the economy, the market, the trends to your advantage, right? So basically, this is all this inspiration behind this platform is to help people get more involved. This is a tool to get more people involved in markets, to make it more approachable, to make them feel empowered. You have the tools, you have the technology. You can do things that previously were not available to people unless they had a high net worth, for example. So that's sort of the inspiration and the background to why this product I think is important, and why I think now's the right time to have a tool like this, especially as we're entering into this new AI-powered future. It's going to just make so many different things that were previously quite complex much easier. So removing some of the complexities from stock market investing was really important. Now, if we can start making the tools really easy, I think about, an analogy that I like to use is how Instagram, in addition to the social network side of things, initially started out as a photo editing application, which then added on social networking, and now we know it as one of the most popular social networks in the world. But when it first started, it was more like a tool to edit your photos, and the way they simplified it and made it very easy for you to take the iPhone, the smartphone made it easy for you to have a camera all the time, wherein before you had to have a separate device, a digital camera or a film camera. The iPhone introduced the ability to take pictures anywhere, anytime. So that dramatically reduced the friction to taking photos. As a result, there was an exponential increase in the amount of photos that were taken on a daily basis. And then tools like Instagram allowed you to edit those photos, retouch them, recolor them, so forth, crop, resize, all those sorts of things. And that spawned this sort of resurgence, or this whole new trend or wave of people who were now essentially photographers. Prior to that, you'd have to use a sophisticated tool like a Photoshop. You needed to have a dedicated camera. You needed to pull those images into your computer, and then you would edit those pictures using professional software, essentially. But Instagram sort of simplified all that. So that's kind of how I look at this tool that we're building. It's sort of like what Instagram was to Photoshop and to photography at that time. This is kind of what I want to bring to stock market research, portfolio construction, and investing. Something that you can learn the tools very quickly, which allows you to express yourself and express themes and ideas, and find out what good looks like, and to try and iterate and just become better and improve yourself over time. So that's what I think is important about this platform. So now that hopefully that addresses what I think are holding people back from becoming investors, becoming active in the markets. As I said, whether it's the lack of capital, lack of experience, they want to avoid losses, they can't afford to take losses, or they're just intimidated by other tools and platforms that just don't really know where to start. So I think this tool gives you the space to try and experiment and learn in a no risk way, because you're not actually risking any of your money in this platform. You're simply using it as a tool to learn and to go through those cycles, those learning cycles and those iterations, so that once you get to the point where you're ready to make that first investment, you're in a much better place, or you're positioned in a much better way than if you were just coming into it with absolutely no experience. So that's just what I wanted to start out by saying. Now, I think, as I mentioned, we learn by doing. So let's maybe walk through how you go about making a portfolio and expressing your ideas using this platform. So I think one thing that we might want to start with is, well, we talked about building a diversified portfolio, spreading your investments across different sectors and companies to help you manage your risk levels, right? So to that end, let's start by just looking at very different discrete sectors. Let's start, for example, with midcap insurance companies. Midcap is basically meaning so you have mega cap, large cap, mid cap, small cap. And so mid cap is essentially like a middle sized, not the biggest of the insurance companies, but also maybe not the smallest of them. Let's see if we can try our AI-powered search. All right, so we just did that search, and that has I understand. So we have this tool or this feature in our search results which allows us to retrieve a list. There's over 5,000 different securities, I think, available, or maybe even more. And so unless you know each and every individual company's name and ticker symbol, the other platforms won't show you all this information. I mean, you'd have to really know what you're looking for if you wanted to see that. But with our platform, we're building these tools that allow you to discover interesting companies. So I just put the autoplay thing there on pause for a second and just looking at the results. So let's look at insurance. We'll pull in some of this insurance results that it brought here. I asked for mid-cap. An interesting thing about insurance is that it's different than a bank. So whether you are, if you are a policyholder, most people I think have compulsory insurance for auto, for example, but not everyone has like other forms of insurance. There's lots of different types of insurance you could have. You can insure your home, your business, you can insure your property. You obviously have auto insurance, health insurance, life insurance. There's lots of different forms of insurance. But if we're just talking about, like, for example, property and casualty insurance, these companies are in that particular sector. And the nice thing about our platform is that it allows you to, at a glance, easily compare all these different companies. So many other investing platforms, trading platforms, they don't present you this level of detail, and they don't present this kind of, they don't display the results in this way. So it's hard for you to like come up with the comparative decision, right? I wanted to bring something that was more like a comparison shopping tool, or maybe like a hotel booking platform, or a marketplace, or an e-commerce kind of system, which I felt that the sort of digital savvy, the younger generations will have like lots of experience using these e-commerce and social media platforms. And to me, it was just a natural thing to want to see all these different companies, all these different assets, in a way that felt familiar to me. Like if I was browsing an e-commerce, or I was looking to book a hotel or a trip or a stay, or any sort of comparison shopping tool. So it was important to me and for our team to make something that was very user friendly and that could present lots of key information at a glance. So as you can see from this group, all of them have been mostly trending up since the start of 2023, which is when this data range starts from. And you can also see that they have different levels of price to earnings ratios, different levels of price to book, different amount of revenue, different market caps. So if I'm looking for a company in a specific sector, or I should say in a specific area of the country, then maybe that's where the smaller market caps would be focused. So Cincinnati Financial Corporation, I would imagine, is pretty has good coverage in the Ohio area where it's headquartered. Another company, like for example, the Progressive Corporation, Allstate's, Travelers companies, these are probably more national or even international insurers. So they're much bigger. You can tell from the market cap, 50 billion, 44 billion, 122 billion. And you can compare the sort of the price to earnings between these three, which are of somewhat relative equal size. And you can compare the price to book ratio, and you can compare the revenue and the net income. So right off the bat, I can see that Progressive is of this group, which doesn't include all of them, but just a sampling of them. It's by far the biggest, and I would imagine that over that time period, it has been the best performer, and that's actually the case. And if I go just from a year-to-date basis, they are still the best performer. And as a portfolio, this group actually far exceeds the benchmark. So off the bat, we are working with a group of companies that gives us alpha, or and essentially what alpha means is it gives us better returns than the benchmark or the baseline, which would be in this case the S&P 500 index. So that's a good place to start. So insurance has been one of those sectors in the economy that has performed pretty well over these last few years. Insurance makes money essentially through annuities. So you pay on a regular monthly basis to have coverage, to have this protection. And most people won't need to use that, won't need to file a policy because, heaven forbid, if something happens to them, then they will have financial, they will have compensation essentially for their losses. And so insurance basically protects you against financial losses of certain types. And so different policies have different coverage areas, protect you in different ways. So you have auto insurance, you have home insurance, you'd have maybe certain type of flood insurance, fire insurance, you have business insurance. There's all kinds of different insurance policies that you could potentially buy, and they protect you against financial losses in certain parts of your life, covering certain types of your assets. Many people have compulsory insurance. This is the insurance you must have to operate a vehicle. For example, you need auto insurance. But there's other kinds of insurance you can elect to have, which can cover other aspects of your life. For example, life insurance. If you were to pass away, you could have some beneficiary be paid out some lump sum as a hardship, to help compensate for that. You could have health insurance, which helps cover your costs if they exceed certain thresholds. And there's different range of insurance, but as a whole, insurance has done pretty well. So I'm not really going to go too far into like which is the best of these insurance companies. Let's just pick one and then move on to our next thing. So we've got an insurance company. Now we're building a diversified portfolio, so we want to think about other areas of our life that where we see certain trends or that we observe how markets are evolving. So for example, let's say that another trend that we see is like, since we're on the topic, let's go into like healthcare, and let's go into weight management. So you might have heard of the GLP-1 drugs, the Ozempics, the Wegovy, Mounjaro, Zepbound, all these sort of GLP-1s, semaglutides, tirzepatides, these kind of weight loss drugs. And using our AI-powered search, we can look for companies that are actively involved in that that area. They specifically have developed treatments and are working in that business, that line of business. So now that we've got our insurance company that can serve as one part of our diversified portfolio, then let's look into adding another sector, which would be healthcare. And let's say we've identified that the GLP-1s are an area that are interesting, we think has good potential. It could help people manage their weight, which could then potentially help them live longer, healthier lives, be less likely to have major surgeries and operations, or heaven forbid they pass away. So I think this is a trend that is something that we might want to look into investing. So again, we're looking at these companies, and I guess they would all have some level of exposure or have bet their company in different amounts on this trend of GLP-1 and weight loss and the benefits the downstream benefits of what that means to people's lives and to the economy. And again, without picking any particular one, just looking at them from a market cap basis, we can see that these are all very large cap. Some are clearly mega caps. Not some of them are actually. There's a wide range of geographies represented here. You have AstraZeneca from the United Kingdom. You have Sanofi from France. Eli Lilly is an American company. Regeneron, New York. Novo Nordisk from Denmark. So you have this wide range of companies across all over the world. So another area of diversity that you could add to your portfolio is geographic diversity. So sometimes you don't want to be totally concentrated in only one country because of whatever country risks, or you just think that maybe the rest of the world has a chance to also grow as well, potentially even faster. So you might look at picking a company that was an international company, for example. So, if we were to look at, on a year-to-date basis, look at which of these companies in that list were the top performers and which of them had sort of lagged somewhat, I think the two best performers have been Novo Nordisk and Eli Lilly of this group. They're probably the most sort of geared towards benefiting from GLP-1s, but they're not the only players. I mean, there's obviously supply chain partners and so forth. So, but in that group, we can now look at Eli Lilly and Novo Nordisk, and if we're looking at them side by side, we can say which of these companies looks like they'll be the better bet for us. Now, one thing I want to point out here, though, is that there's a feature in our platform that we're going to be implementing soon, which is currency conversion. So the revenue numbers that you see here in Novo Nordisk are actually, I believe, they're in the Danish kroner, is it? So we need to do a quick conversion just to make it simple. I'm going to go ahead and stick with Eli Lilly since the US dollars are easy for me to understand. So we've got two companies. We have Allstate Corporation, Eli Lilly. So we're expressing different themes. One is just a general sort of like insurer that covers, vehicles, asset protection, road hazard, tire and wheel, paintless dent repair protection, roadside assistance. So a lot of auto. They might be quite a big leader in auto. And then I'm wondering if they offer other types. Looks like they do offer life, accident, short-term disability, other health insurance products. So it's sort of a full-service insurance provider, and their performance is done pretty well. And so, I mean, we can see the trend. Again, it's an area that I think will we will have insurance as part of our lives for the foreseeable future, short, medium, long term. So that's an area that I think insurance is something that I think will be a steady investment for us. And Eli Lilly, I think they do other things beyond just the GLP-1s. I think that's their big growth sector right now, as it says here: Mounjaro, Trulicity for diabetes, Zepbound for obesity. So if you're looking into, trying to, if you're looking to invest into a company that could benefit from the world getting into better shape and losing weight and managing their weight better, and sort of tackling this sort of epidemic of obesity that we are seeing across the world, I think Eli Lilly can also be a potential good choice for you. So that's two. Another thing we might want to look at is, let's say, small cap enterprise software companies. Small cap enterprise software companies. So we know about the big technology companies, Microsoft's and Salesforce and IBM. But what about some of the smaller cap companies, the MongoDBs, the HubSpots, and so forth? So we've got a few here that we can look at. Let's pull into here MongoDB. Let's search that again too. Let's see if there's additional results that we didn't get the first time. There's one called Blackline and Appfolio and Alteryx and Paylocity. Just pull those in for a second, and just now we're looking at a small cap enterprise software company. Enterprise software meaning they're selling business to business software, so their customers are going to be other businesses and employees at those businesses versus companies selling directly to consumers. So in that sense, it should be a somewhat more resilient kind of business model, assuming that their customers are going to continue to grow their spend, or at least maintain their spend. And to be honest, I don't know what all of these companies do exactly, but I'm just looking at them from a market cap perspective. HubSpot is around 30 billion, MongoDB about 26 billion, the rest are sub 10 billion. And Paylocity looks like it does payroll software, tax services, automates expense reports, so that's interesting. Alteryx is a global company. They do data science, data engineering, analytics, data profiling. Okay, interesting. It serves telecom, food services, retail, hospitality. So they look like they're a data platform company. Paylocity looks like it's in the payroll and employee, possibly benefits, human capital management, time tracking, that kind of thing, helping people get paid. Blackline looks like it's doing accounting and finance. Some kind of business process automation, possibly. It looks like it's doing some risk analysis, looking at financials, so that's interesting. Appfolio provides cloud businesses for the real estate industry. So if you are probably like a real estate agent, you might be using Appfolio as their property manager, plus helping with housing management, student housing management, complex accounting, so forth. And MongoDB is a database as a service company. So a lot of companies building software might use MongoDB as their database technology. So MongoDB provides that as an open source, and then you can use their premium products and use them as a consultant on certain projects as well. And HubSpot does marketing automation and CRM, so I think this helps. I think this sends emails to people, get them to use trials, get them to become upgrade their account from free to paid, for example. Helps people run marketing campaigns. So this is like marketing. So if you're being really like, if you really wanted to do more diligence in each of these companies and try to think which of them could utilize AI, well, I think all of them could. All of them could be beneficiaries of AI, but and I think that could definitely improve their business prospects. Alteryx is doing data, so that definitely could benefit from AI. Paylocity, payroll, sure, you could use AI to help you with that. Blackline is also doing kind of accounting, finance software. Definitely you could use AI to help with that. Appfolio with real estate property management, sure, of course. HubSpot, definitely. MongoDB and so forth. So of these, I think it would be easy to just say, look, I'm not looking to invest in very volatile companies or companies that have been trending because I just really don't know much about them. But if you're, a long-term investor and you really want to do diligence, you might look at some of these companies. But let's make it easy and just focus on the companies that have been proven winners. Again, this is data from the beginning of 2023. So, past performance is not a guarantee of future results. So, if you're building this portfolio, you're essentially entering into these positions now, and you're hoping that this trend, or your idea is that this trend continues over time. It's not that you're buying the past performance. So that's not the product that we're offering here, is to purchase the historical performance of these companies. I think what you're looking to do is just try to think about different trends. So if you're looking at a smaller cap enterprise software company, here are three to look at. Now, if you're looking at a market cap, look, 30 billion, 26 billion, 8 billion. These are all what you would consider small to mid cap. In terms of revenue, some of them are in the billions. MongoDB and HubSpot are both in the billions. Neither of them, though, have had a positive net cash flow, so they're taking a bit of a loss, but I imagine they're growing still. Because of that, they don't have a price to earnings ratio because there's no profit there, but they do have a price to book ratio. So each of these on a price to book, revenue to market cap basis are roughly almost pretty much the same multiple. So that they're very similar. In this case, you're just really looking to see, do I want to bet on enterprise software infrastructure, or do I want to bet on marketing automation? These are probably equally good bets. And then, of course, on Appfolio, you're looking at a very niche kind of bet, a company that does have break-even, looks like actually cash flow positive. They are profitable. Marketing, their market cap is, there's a good multiple on them. It's not inexpensive. But interesting. So I'm not going to make a call on any of these three. I'll let you guys be the ones to decide. But that is a way to think about having another part of your portfolio to help you with diversification. Let's search one more time just to see if we find anything else interesting within small cap enterprise software, if it's going to help us pull up anything that we didn't see yet. Most of those results are pretty much the same. Let's just do small cap software instead of enterprise software. See what that leads to. Right, so there's another company here, Zora. We have Dropbox. I'm just going to add Appfolio here just for now, just to continue with our exercise here. So we've got three. You probably want to have 5 to 7. So another company, let's think about consumer. What about the consumer right now? Is people say, the consumer is struggling, the consumer is resilient. Well, you could be resilient and also be struggling at the same time. Like you could be trying your best and keeping your head above water and just managing to do so. And so I think it's safe to say you could be both, struggling somewhat and resilient, because you're not drowning, but it's you're working really hard to keep your head above water. So I think, food prices in the United States, hopefully they're moderating somewhat. There's always that you can always go grocery shopping and cook at home. But I think people like to eat out every once in a while. And if we were thinking about what are some quick service restaurants that people like to eat in the United States, let's see what those results bring up. So we've got Starbucks. Let's see, Starbucks, RBI, McDonald's, Yum Brands, Chipotle. Let's start with this. Okay. Starbucks looks like it's been going through some struggles, although it does have positive net income, so it is making a profit. Huge revenues. Market cap ratio between revenue, it's about a little over 2. It's, so that's Starbucks. It's its own thing. It's hard to actually group this in with other companies. Same with McDonald's. It's kind of its own thing. They're big enough on their own to kind of be in their own category. I don't think people choose to say, I'm going to go less at Starbucks and more at McDonald's. And I think there's some overlap with coffee and that kind of thing, but I don't think that they're direct competitors. That said, I probably wouldn't have both of them in my portfolio if I just wanted to maintain some level of diversity and have one company in consumer discretionary. There's another company here called Restaurant Brands. Restaurant Brands looks like it has a portfolio of different quick service restaurants, including Burger King, Popeyes, Firehouse Subs, Tim Hortons. So that's kind of interesting. That gives you more diversity than a pure play coffee chain or a pure play sort of burger joint. So you've got Restaurant Brands you could look at. Yum Brands, kind of similar. They have KFC, Taco Bell, Pizza Hut, and Habit Burger Grill. So that gives you some diversity as well. You've got a whole bunch of different kinds of restaurants within one portfolio of this Yum Brands. And probably the best performing restaurant stock of all time, I think, is Chipotle. So Chipotle Mexican Grill is, they sell burrito bowls, taco, salad, quesadillas. I think they have pretty good investments in digital. I think they have, order ahead. You can pick up your order. You can order through your mobile app. They probably have membership programs and so forth. So I think, of these, which am I most likely to go to? Look, I like Popeyes and Burger King and McDonald's and Starbucks, KFC, Pizza Hut, all that, like everyone else. But if I'm in a hurry, or I want to have some fast food, I think I'm gonna go with. I might look at Chipotle here. And it looks like I accidentally removed Allstate from my portfolio, so let's just bring that right back. You can search by ticker as well. We're back. Alright, so we're back here. We've got these 4. We need a few more. What are a few more ideas? Well, we've got our search results here, which just kind of, in addition to giving us the search results as we search for them, it also provides other suggestions or ideas for us. So here's another one. How about Costco? Put Costco in there. So that's a Staples. I think the nice thing about Costco is that it kind of counterbalances the Chipotle thing. And then I think I don't think that's directly that too competitive with Eli Lilly and Chipotle. Chipotle, you need protein. So even if you are, watching your weight with Eli Lilly, there's healthy bowls and things you can get at Chipotle. So that those I think are mostly complementary. So I'm fine with that. Let's just add T-Mobile as well. Might as well, right? Everyone needs communication services. Everyone needs, a mobile internet provider, I guess you could say, a mobile carrier. So we all need cell phone coverage, whether you're, using it for personal or for work. Almost everyone needs to be connected all the time. Now, out of those telecom companies, let's just pull up a few, just to see what else is there. I think the other options are Verizon and AT&T. It looks like T-Mobile has been the best performer over the last year and a half. So, yep, I'll just go with T-Mobile. I believe that they are somewhat defensive as well. it's one of the last things people are going to cancel when they do feel like, money's tight. Like, you're pretty much always going to have your internet. You need that to get emails. Hopefully you'll get a job offer, or you might need internet for your business. Maybe you're making money online somehow, so you're going to need internet. And I think T-Mobile has been one of the better performers. Now, you might have your own opinions, and depending on where you live, the coverage may not be as great, but I think for most people should be fine. So that's that, and we'll add one more. What's another thing that we could think about? Yeah, I would just say something along the lines of infrastructure. So let's just say infrastructure, industrial company. See what ideas we can generate from searching for an infrastructure industrial company. Right, in the US, we're talking about infrastructure, the infrastructure bill. We want to build these data centers, we want to repair the roads, we want to build new schools and hospitals and sports facilities and other places just for people to congregate and feel a sense of community. And so I think infrastructure providers can really do that. Roads, bridges need to be repaired. We need to lay down pipelines and electrical lines and those sorts of things. So the infrastructure companies are going to be important part of building literally our future. So let's just pull up one that looks interesting. Right now I'm looking at, let's say MCOR. What does MCOR do? We'll pull them in here. And MCOR provides construction and facilities building industrial services in the U.S. and the United Kingdom. So yeah, that you get some global diversity there as well. Looks like they're doing voice data communications, so probably running fiber optics. Yes, computerized traffic control systems, plumbing and process. Great, yeah. So that sort of covers quite a bit here. Headquartered in Connecticut, market cap of 17 billion, revenue 12. Net income profitable with free cash flow. Price to book, a little bit high for that industry, but compared to all the other companies in our portfolio, not the highest by far. So, yeah, I think it's a good 7-stock portfolio. And even though T-Mobile has been the laggard, I think it still provides a level of, let's say, safety, because it is sort of defensive as a communication services, and it might even offer a dividend. One of the things we're going to add to our platform is to let you know which companies pay a dividend, so you can see how much money you could expect by holding that company. So yeah, overall I think this is a good place to start. You can see here I've got these 7 stocks in my portfolio covering a wide range of different sectors. And the year-to-date performance has been pretty tremendous, due in large part by Eli Lilly's standout performance. But that's not the only standout in our group. In fact, on a year-to-date basis, the highest performer has been MCOR. In fact, that industrial company, the engineering and construction company. So here's just a quick idea for you guys how you can use our platform. We'll be launching this in the coming weeks. We really hope you enjoy it, and thank you for your time. Talk to you guys later. Bye.